This is Rick Rule for Rule Investment Media and the Rule Classroom, sponsors of the 2025 Natural Resources Investment Symposium in Boca Raton. This series of pre-conference interviews is meant to give our attendees, whether they attend live or live stream, the ability to allocate their time at the conference more efficiently by learning about the exhibitors before the conference even starts. You'll have 50 to 55 hours of programming over 4 days, more than you could possibly absorb. To that end, we will interview every exhibitor before the conference, and we will make recordings of the proceedings available for you after the conference for a full year. Note too that every single public company exhibitor at the conference is owned in my own accounts. Your guarantee that every single exhibitor has been vetted. The following exhibitor probably needs no introduction, but that notwithstanding, I'm going to introduce them anyway. Ammar Al-Joundi is CEO of Agnico Eagle Mines, which has been in my accounts on and off, currently on, for almost 50 years. Ammar, thank you, first of all, for your service to shareholders, in particular myself. And thank you, too, for your sponsorship and support of the Natural Resources Investment Symposium.
It's our pleasure, Rick. And I love that you've been an investor for over 50 years. And what I should tell the audience is I'm actually 105 years old. So, I've been at this for a long time.
Well, tell us something about what you've done over those 105 years. Tell us why we should be listening to your answers to these nosy questions.
Well, I honestly, I think I work for the best company in Canada, one of the best companies in the world. I'm very honored, and I mean that genuinely, to work for a company that has a good strategy, that has good people, that operates in good jurisdictions. Rick, I grew up in a very middle-class family. I'm an engineer. Undergrad as an engineer. I went to business school. I never thought I'd have the opportunity to have the job that I have, and I'm excited to talk about. I know there's a lot of companies. I'm excited to talk about Agnico Eagle.
Going back, I remember Paul Penna fairly well, and the culture of Agnico Eagle has been amazing. That sadly can't be said for all major gold mining companies. I remember in the New Orleans conference, Mr. Penna at the end of the conference packing up all of the rest of the promotional materials and taking them home, while people who ran nothing nowhere companies just threw theirs away. There has been a frugality and a sense of honoring employees and shareholders at Agnico that I would suggest to you is responsible for the success. How that culture evolved and how do you maintain it?
Well, Rick, that's a perfect question, and that's the right question. All kidding aside, I turned 60 last summer, and all of us, we start our career, and people talk about culture, but you don't really appreciate it until you've been in business for a while. And you're absolutely right. The culture at Agnico Eagle is foundational to who we are. Let me tell you a little bit more about Paul Penna. He was not only a frugal guy, but he was also a very generous guy. He literally would, and this is going back 30 plus years ago, he would, in the middle of winter in Toronto, go out and give this, people on the street who had nothing, who were on the sidewalk. Not only would he give money, at one point, Sean Boyd, our chairman, said that Paul gave the fellow his coat. And so he was a gentleman who treated his owner, the investor's money, as if it was his own. We are a very frugal company, and I'll get to that in a minute. But Paul was also very generous. And if we then talk about Sean Boyd, and Sean, and Sean's our current chairman, but he was CEO for over 25 years. I'm only the third CEO as far as I know. Sean started at Agnico right out of accounting school, and he's been here ever since. So, we have a culture that was built by Paul, that was enhanced by Sean, and it's a great culture to work. The culture that we have is one of trust, of respect, of treating each other equally, of treating each other and understanding our responsibilities, but it's also one, Rick, of family. And I know that's a word that's used a lot, but for us, it means a lot. Now, what does that mean in business? Of course, I'll give you an example. We have half the turnover rate of our peers. That gives us a competitive advantage. When I talk about Agnico, I can say with confidence, one of the reasons we are able to deliver more consistently, it's not because we're smarter, it's not because we're harder working. You know, our engineers, you know, they have smart engineers, they have smart finance people, but we build our own mines, Rick, for example. You know, we are a regionally oriented company. We focus on regions we know well. We've always been sort of more miners than anything else, and that served us well.
Let's talk about that focus then. I mean, obviously, I agree with you that the culture is reflected in return on capital employed.
Absolutely.
And all-in sustaining costs.
It is.
I think your assertion has been backed up by operating performance for at least 15 years. So let's talk about the asset focus. Let's talk in particular, because I suggest that part of your franchise is becoming northern and perhaps Abitibi focused. Talk something about the Abitibi and talk something about your ability to build mines in what would otherwise be considered cold, remote, and hostile terrains.
Well, you're again, well, you know us well. I was going to say you're exactly right again, but I'm not surprised because you do know us well. So I've been in this business a long time. I've been in the gold mining business for over 25 years. I spent quite a bit of time at Barrick. I left there as the CFO. You know, Barrick's a great company, but Barrick and Newmont and Kinross, they all have a different strategy than Agnico. They all consider themselves global gold miners. They will go anywhere in the world to build a gold mine, and that's okay. I get that. It's kind of logical. If you want to be a big mining company, there is a logic to say I'm going to go anywhere in the world where the asset is. Agnico is not that, and this is really the big difference between us and most of our peers. And it gets to your point about where we're operating and how we operate. Agnico, we consider ourselves regional miners. We'll go anywhere in the world, but we'll only go to regions that meet two criteria. One, of course, it has to have the geologic potential, but for multiple mines, Rick. We won't go anywhere for just if we think the geologic potential is only one mine. And two, it has to have, this sounds self-evident, but it's important, it has to have the political stability to actually allow you to operate multiple mines for multiple decades. And why do we do that? I think if you're honest with yourself and you say, what makes a good miner? And when you have, 10 or 15,000 employees, it can't be individuals. It's not, it's not me. It's what makes the company good as a miner. It's actually, do you know the ground better than anyone? Do you know the contractors better? Do you know the supply chain better? Do you know the permitting better? Do you know the First Nations better? All of that comes, frankly, with experience. And in Canada, we produce more gold, Rick, than the next 8 companies combined. And to your point about where we're operating, in the world, based on geologic potential and based on political stability, the 3 best places in the world to mine for gold are probably Nevada, and Newmont and Barrick are there, and they share that. Western Australia, nobody's really consolidated that. But the best place in the world is the Abitibi, the broad Abitibi that you talked about. That's Quebec, Ontario. And I say that it's produced more gold than the others. It's had the most discoveries in the last 10 years than the others. And it's continuing to grow faster than the other regions. And so we have by far the dominant position in Ontario, Quebec. And we also have a strong position in 3 what I call emerging or re-emerging. None of it, Northern Canada, where we operate, one company, we're a third of the entire economy up there. We produce almost 1 million ounces a year in Nunavut. we spend about $700 million a year in Nunavut. Every single supplier, we help them start their business. Every contractor, we help them start their business. That gives us a competitive advantage. We're also in Mexico, and we like Mexico, and Mexico are good miners. They've been mining for 500 years, and we like Northern Europe. And by the way, Northern Europe used to be a mining powerhouse until about 30 or 40 years ago when the wall came down. Then they said, well, let's let the Russians do everything. I promise you, Europe is now revisiting their resource dependency on Moscow.
I don't think you watched the podcast, but we did a Q&A in the Real Classroom about 4 weeks ago where I argued that despite the superb share price performance of Agnico Eagle in the last 12 months, if you normalize the margin around gold prices, Agnico may be cheaper today than it was 12 months ago.
Yeah, it is.
If you could talk something about your ability to generate free cash, and in particular, what I would consider the unparalleled development pipeline. Agnico is not a company like a couple of its peers that's in liquidation, but rather one that has a development pipeline and, frankly, the financial flexibility to develop that pipeline. Perhaps you could talk about that.
Sure. Well, just over a year ago, as the gold price started to move up, we had a very important discussion with all of our senior leaders, which is a very simple point. The only reason people buy our stock is because they want upside to gold. In other words, if the gold price goes up and we don't deliver that upside, why would they buy our stock? So we said, look, we think we're constructive on gold, and what we need to do is deliver. The gold price increase has to go to our owners. It can't go to increased costs, can't go to stupid investments. And so to put it in, to tell you how we've done, and I've got the numbers here, quarter over quarter, first quarter 2025 versus first quarter 2024. And the numbers are still very good, but these are the last public numbers. The gold price, Rick, went up $830. Our cash costs went up $2. So this gets exactly to your point. If our job is to deliver gold price leverage to our owners, that's our only job. I think we did a pretty good job. $28 of that $830 increase in gold price we've delivered to our owners. And by the way, since then, the gold price is up another $450. So we are absolutely determined, because we think this is why our owners buy us. We're determined that the increase in gold price has to go to our owners. Now, you also made a very good point about we're not in liquidation, we're growing. We're in the business of capital allocation. I love my job. I love the people that I work with. I love going to the sites. I don't drive a truck, and I'm not at the rock face. You know, people at my level, our job is capital allocation. And capital allocation, if you want to get the best risk-adjusted return on capital, it's always investing in stuff where you're leveraging off existing capital. And it's also, and this is important, it's also important to have a knowledge advantage. I mean, you're in the business of allocating capital. Your job, I'm going to guess, Rick, is 90% knowledge. What are you doing to get the knowledge? If you were me, what would you do? You'd be in regions that you know. You'd have a competitive advantage in those regions. You'd know all the juniors, etc. This comes from this regional approach. So at Agnico, we have 5 big projects. We have a number of projects, but I want to hit 5 quickly. We have a mine called Detour that we think we can increase from 700,000 ounces a year to over 1 million ounces a year for decades. We have a mine called Malartic that we think we can increase from 650,000 ounces a year to over 1 million ounces a year for decades. By the way, in the entire Western world, this would be two of only 3 million ounce a year producers. We have a mine we're building called Upper Beaver. That's about another 230,000 ounces a year. We have a mine called Hope Bay in Nunavut, which would be about 400,000 ounces a year. And we have a mine that we're building in Mexico with Teck. Our share of that is about 200,000 ounces a year. Now, all of those mines are good in and of itself, but what I want to emphasize is every single one of those are mines we already know in regions we've been operating for decades with teams already in place, leveraging off existing infrastructure. So I'm not here saying, look, I'm going to go to the middle of nowhere in a country I've never been to and build a really expensive mine. I'm saying we have mines where we already are leveraging not just the capital, but the people. And I promise you, in our business, the best risk-adjusted return on capital is leveraging off existing assets.
And of course, an existing reputation and existing people.
And existing people.
You know, when I was listening to that recitation, first of all, the 1,000,000 ounces of incremental production, and then the answer to the question before that, I was going to say it amuses me. It horrifies me to remember the decade 2000 to 2010, where the gold price went up sevenfold and free cash flow per share on the Philadelphia Gold and Silver Index fell.
Yep. Yep.
It took real skill for the industry.
Well,
so
it is horrifying.
Thank you.
It is.
Thank you for bucking that trend. Thank you for, despite the fact that your share price doubled, selling for what I would consider to be a lower valuation than 12 months ago. We could do this forever, and I'd love to have you back in the real classroom for a long form interview. But time doesn't allow that today. To the extent that people coming to the conference or just people listening to the interview want to learn more about Agnico Eagle, who do they contact and how do they find that person?
We love talking about the company, and so I'm going to give you two names. They are the two folks who run our investor relations team. They're both very, very smart. They really know the company, and they love talking about it. So the first gentleman, he actually runs the team. He's a mining engineer, Jean-Marie Clouet, good French name. And I will give you his, if it's all right, Rick, I can give you his email address.
Please.
It's and it's a bit long. EANMARIE.CLOUET@agnicoeagle1word.com. And the other colleague of his, a very bright young woman, Aurea de la Resma, and I'll give you, that is AUREA.DELARESMA@agnicoeagle1word.com.
Sir, thank you so much for your years of toil on behalf of investors, particularly me. And thank you, too, for your ongoing support of the Natural Resources Investment Symposium. I look forward to hosting Agnico Eagle in Boca Raton.
We absolutely look forward to it. And thank you again, genuinely, for being a longtime supporter. And we hope we continue to do well for you and all the other investors.
Thank you.
Thank you, Rick.